We're going to use that information in the first episode to create the new knowledge of, to acquaint ourselves with the new knowledge of Malaysian SNR. So this episode is going to trash out this content. The Malaysian SNR, the open and close relationship of price action, the marking of the SNR levels, type of SNR you must know, then the fresh and unfresh SNRs, the SNR plus sweep, SNR plus miss, SNR plus touch. So those are the information we'll trash out today, the content we'll trash out in this episode. You're welcome. So we the last in the first module, we made mention of support and resistance. That the significance between in the price information lies in where the body of the candlestick closes and opens next. Yeah, it's relationship between the close of the body to the next opening session. That is where the significance lies, and that's what we call the equilibrium. When two players are moving in the market, I told you they face a strict opposition, right? They face opposition, strict opposition from each other. So buyers are trying to move up. Buyers try to move price upward. So they face opposition from resistors. Then sellers took it there to this level, and buyers took it from them. So those are opposition levels. So we call this place what we call the equilibrium. That creates what we call an equilibrium. An equilibrium. That means when sellers are coming down, right, forcing their way to negotiate for a lower price, right, while buyers, so they are coming to create the support level, while buyers are going to create the resistance level when the market is taking over from them. Yeah. So they represent the buyer. So we have this now as where this is the battlefield for both of them. This is the battlefield for both of them, which is what we call the equilibrium level. In our economic times, the meaning of equilibrium. When the buyers and sellers, where they meet, that means the buying and selling meet at the same price level. So that is what we understand from the economic times in our old school days. Yeah, the equilibrium level. So it's created by the forces of buyers and buying and selling come into agreement that this is level of equilibrium, equal level of buying and selling. So when market comes to this equal level of equilibrium, becomes a kind of what we call the range in the market. So it becomes a kind of bust up, a kind of a stronghold. So who is willing to take this market now, either above this equilibrium level? Let me use this. So whoever is willing to take this market above this equilibrium, if buyers try to push it higher above the equilibrium, so markets will follow, it will follow that direction, because direction lies in the momentum of the markets, in the angle of momentum. Yeah. So if buyers will take this market higher, the buyers are coming from this level, right? If they could take the market, let me do it like this one. And they push it higher to break this equilibrium level. So that battlefield has been subsided. So, more forces. So they have gained more energy to push it. If you are buying, if you are making profit, you want to make more profit. That is the basis of human psychology, the sentiment. You want to take more profit. If you are greedy, you want to be greedy more. Yeah. If you are fearful, you want to be more fearful. Yeah. That's the bias. So they will going to take it higher. But in a case where the sellers, it is the turn of the seller to take it from this equilibrium to this place, that means they will going to take it lower, because they will be going to bid for what? For lower price, in the market. So this equilibrium has become what? A standing point. A standing point. A standing point. So the resistance and the support represent the equilibrium in the market. So that is where the power lies. That's where the power lies. So in the open close relationship, we made mention of where the signal of where the body closes and the next one opens. Buyers take the price from this level. From this level, they took the price, or let me start from here first. No. You did a mistake there. This should be in the other side. The other side of the market. Yeah. Yeah. So for now, it doesn't really matter as long as we have a body. The two of them is represented by a body close, the closing of the body. So that what really matter to us for now. That what really matter. So if sellers open here, right? They open here, took the price higher, then come down to take a low, then close right here. They close here. So the next candlestick opens. Sellers have created this kind of resistance and support level here, right? They've created it here because this is where they are taking the price from buyers have created a support level here by taking the price away from the sellers when they are buying lower price to sell higher. So they take the price. So any movement from this opening level above creates what we call a momentum above the equilibrium level. So now the next candlestick opens in the same level of that previous close. Then it will first come down, trade this thing of this low, then it will now move higher. Now comes down. That's a price rejection. To close lower here. So the wicks now represent anything from this level above here represent the wick of the candle, which represent the price rejection. So which indicates price rejection because it was first coming down, then it was rejected upward. First coming down, it was rejected upward. So buyers were trying to push the price against the sellers, right? So they gain momentum over seller because they were able to push it above this level of equilibrium here, this support level. So they now move it. So that place has created what we call an S&R level, support and resistance, a support level of an S&R. So now the opposite side of it, buyers took it from there, push it higher. This candle opens here. You have to first go down to create a low of that session for it to now come to from anything from the opening here upward determines the DC, right? Where the market direction lies. Now it moves higher. It moves higher to clear out the previous above the previous liquidity above this the liquidity above this equilibrium level or resistance level. It will create the high of that session, then come down to close here. Where it closes now creates what we mean by resistance. So a resistance is created. The resistance is created there. Then the next session, you see them take it higher, right? But it was rejected again by sellers who took advantage of that, of the weakness in buying to sell lower. So they took it lower to come and close here. So this place now have created the resistance of the market. So that is what the open-close relationship has given us. So now, the purpose of this place, the purpose of this resistance support level, which we have explained so far, is to see price. Next one, we are going to look at how price is going to react at each level of this S&R. So how price is going to react? How price is going to react? How price is going to react? Let me put it this way. Yeah, S&R. So that's what we mean by S&R. Because I hope you must have understood the logic now. How S&R is being created. How S&R is created at the upper and the lower level of the market. So it is the momentum of the market, the equilibrium level of the market, that determines the S&R level. So this one becomes the support. So we are going to now to look where the price when price is coming back in a subsequent time, it's going to reject this place. It's going to tap into this S&R level and got rejected, then start coming down. That is what we are going to be trading upon. Then here, if you are going to buy, you want to look to price to come into this level, to break through it or tap into it, and move higher. So we must follow the trend. This is how the market makers operate. Once they see this as a big liquidity pool, so they use a lot of volume. They push a lot of volume to it. Took it lower, you see a kind of a wick here, the price will move higher to the opposite side. So that means you're going to see something like this. You're going to see something like this. You're going to see something like this. You're going to see a wick like this. A wick of the candlestick. The nature of this candlestick here matters to you. The nature of candlestick there matters to you. You are going to see this wick like this. It could be here. It could be here. It could come down. As long as we see a wick and with a close, as long as the price withdraws back upward to close higher above the support level. So we have gotten our price rejection above that level. So we are going to trade into the rejection. We are going to buy into the rejection because the next move will be buying, right? So here we are going to see something like this. You can see something like this. At this level, you're going to see something like this. You can get something like this. A tap into that, either a tap into it or a break through it with a wick. Then it will draw back. It will draw and close lower and close lower. We just need a wick to tap into it and got rejected and got withdrawn below the resistance level. That's what we need, so that when we come in, we go to sell into this rejection and need to go lower. So that's our purpose for this thing. So we go to the next. What the type of S&R, type of S&R, type of S&R. Let me clear this. Let me clear this so that this. Yeah. So we go into types of S&R. Types of S&R. Before we come to the marking of marking the S&R level. Okay, we've already. Let's talk about that marking. How to mark your S&R level? But that is most important. How to mark your S&R level? We talk about the wick and the candlestick, right? The wick display the body in relation to the close, while the candlestick displays the high, low, close, and open, right? So for accuracy purpose, it is better to change your distance first into line chart. You change into line chart to see the distance. If you want to mark your distance, you are going to look at the inverted V shape. That's for line chart. This is what you are going to look at for. This represents the support area, while this represents the resistance area. Yeah, this represents the resistance S&R. While this represents the support level of an S&R. So that is the chart. You're going to look at the chart and to allocate to identify the V shape. All these V are resistance. The S&R, the resistance. Now I told you the last chart does not it ignores the wicks. So that's why we are making use of it. It is clearly shown on this thing. Yeah, it's clearly shown on it. So this represents this is the support, the V shape. This is the battered V. This is the battered V. This is a V shape. This is the support level. This support level, right? So this is support level. Right? This is the resistance level. resistance level, resistance level, resistance level. Then we have this as what? As the support, the support, which was broken out. So that's how to mark your this in line chart, but in candlestick. So once you mark it like this, you change it to the candlestick to see the position in candlestick. To see the position in candlestick, change it. You can see now. Yeah. So this is resistance. This is resistance level. This is support level, which was broken below. This is the support level. This is support level. This is support level. This resistance, resistance, resistance. So the close of the body and the open of the new one create your S&R. So that's how to mark this thing in your line chart. Actually, you must have open up the line chart to see the curve. That sharp curve is what you are looking for. Because sometimes if you can do it, you also do it. You can do it in this, but just not. You need to mark it accurately. You can also do it in your this. Fine. You can do it. Fine. So that means your this will be here, right? That is your resistance created by the bullish candle. Then this is the bearish candle. So now that means this place become what? This place become your level of resistance. The level of resistance. The level of resistance. Level of resistance. So now for support, this is how it looks like. That looks like. So you take the first, connect the first first. Please take note. You have to connect the first. Even if this one goes up like this, if it goes up like this, your focus is on the first close. The first candlestick that closes here, and the next one opens, right? Your first assignment is to connect the first candlestick. The first candlestick that close here, you have to connect the bullish candlestick close first, joining in with the opening of that bearish candle. So this is your S&R for support level. S&R support. You can see the way I mark my this now. Please take note. You don't mark it any. Don't mark the wick. Ignore the wick. Just the close and the open. Even if the open comes lower like this, because sometimes the candlestick can gap down. You just have to mark this place. Not here. Not here. You will not mark here, but you mark here. But that's what we are particular about. Yeah. So even if this place comes like this, and you have this like this, you just have to carry your this and mark here. That's what we are particular about. Yeah. That's what we are particular about. Because sometimes there could be a gap between the close and the open. So you just have to focus on the close. Focus on the close and draw your this into draw it forward to the right. Draw it forward to the right. So having done that, we move on to the next thing. That's how to mark your levels of S&R. Then we have the type of S&R. I'm going to move to the next item. Types of S&R. Type of S&R. We have about four we're going to talk about. We have the types of S&R. Types of S&R. The first one we have there is classical or regular type. The classic or regular type. Call it classic. S&R. Then we have the second one as a gap or open and close. Open, close, or gap S&R. Then the other one we have is we have the flipped S&R or breakouts. We have the breakout of flipped S&R. Or flipped S&R. Then the fourth one, we have the HNS, head and shoulder pattern, or KML S&R. So are the four types we have. So the fifth one is not really, we can ignore that, which is the broken head and shoulder. Broken head and shoulder. So the first one we talk about this is the classical. This is the classical. This is the regular type. Classical. This is the classical. This is for resistance. This is a classical S&R. Then for support, just the opposite. For support, this is a classical. This is a classical. Then, so if you see it in your DC, in candlestick, this is a classical. This is a classical. This is a classical. When you see the two DC, open, close, that's a classical. Classical, S&R, just classical, S&R. This is classical or regular type. This regular type. Anything you see like this, you mark it out. Classical. Anything you see that moves higher or lower and close, then a new one opens with it. So that's classical. So you can see the shape so that you don't miss out how to identify it in your charts. That's classical. Then we have the other types of DC as gap level. The gap level. We have this as gap level. Price is moving higher. That's bullish candle. So when we have two consecutive candlestick in an upward move, then a candle here that trail turning into the body, that trace into the body of this or the previous candle, on the previous something like this. What is something like this? Hmm? So whenever you see something like this is a gap level of S and R. It's a gap level of S and R. Very, very powerful information. Very, very powerful and very unique. This is a gap level of S and R. So you put your DC here, your line, thread forward, gap, gap. So what are we looking for next is to do what? Is to, let me put that, we do. So we want to look at price. Price should come in later to break through on tap into this before we sell and withdraws back. Price must come into that zone and withdraws back downward in order to sell. In order to buy, price must come back into the zone, must tap into the zone and withdraws back to close higher. That's what we are looking for. We want to buy into this support rejection, then what we will sell into the rejection of resistance level of that SNR. Therefore, gap, you want to buy whenever price come back and tap into this gap and got rejected above. We want to buy into it. But eventually, if it was broken through, when we come to breakout, we talk about that. Want to buy into it. Want to buy into this place, this support, right? So then for sell, if this is the candle, two candlestick moving in the same downward direction, then we have a pin or just little, it could be little pin. Another one continues the journey downward, probably with a pin. A pin like this. A pin like this. Could be longer, it could be this, it could be that. Anyhow. Yeah. So we are looking at, you will now mark this is the close and the open of new candlestick. You mark that open and the close. No, I'm not going to use the trend line. Use just ordinary line. Use ordinary line. Gap. So we are looking at price to do what? To come to retest it and bounces downward. So I will take a position, right? Take a position from there. So that's the gap level. Then we talked about the next one. This is the breakout. Breakout is simply something like this. When you have something like this, breakout, something like this. Tap into this, it goes higher. Breakout. This is breakout. That's a breakout. So this place now represents the breakout position. The breakouts. Yeah, the breakouts. That's for buying. You want to see if price break through, if this is a kind of this thing here, right? And we have a price that breaks through it, the price will retest it and move higher. If it happens to be this, right? God break through it. Price break through it. Price break through it and close lower. So that's a breakout. So we are waiting for price for retest of that breakout. So which means this support here that was broken through now becomes a new resistance. We call it, we term it as SBR. But here, whenever you see a bullish candlestick that closes, that breaks through this level, that's a classical SNR, then we look at the what a retest and buy into the retest. We look at the retest of that place to the broken resistance and buy into it. Right? So the broken resistance has now become what? Has now become a new support. We call it SBR. Support becomes what? Becomes resistance. So because it becomes resistance. So for selling here, is like this. It creates the support. Then later on, subsequently, price comes down to break through it. Break through it and retest, got retested. Got retested. So this place now become what? This place now become a breakout point. This is the breakout point, right? This is the breakout point. You break through it, then it got retested. Now say this is a support now becomes resistance. Support becomes resistance. While the previous one is resistance becomes support. Resistance becomes support. Resistance becomes support. RBS. Resistance becomes support. So that is breakout. That's a breakout. Then we go to the HNS. This is the head and shoulder pattern. This is like this. So something like this. The head is created. It could come down like this to form the kind of KML. This is the KML, right? If it forms like this, that gives us a KML shape. So you mark it up like this. Yeah. So this is the HNS. This is the left shoulder. Right? This is the right shoulder. This is the head. So it could be termed as what? As HML. That's HML. So we're going to sell into this place. You sell here when price start back into this into the right shoulder. You sell here. Here we sell here. Using your confirmation very well. You sell it. So for buying, it will be this. Then it took out this, right, to create a new higher high. They come back into this level. So we have this place as what? As the left and right shoulder, or the KMS. Right, the right shoulder. Yeah, but for head and shoulder pattern, it will be this. If you see this like this, so that's head and shoulder pattern. HNS, SNR, head and shoulder pattern. HNS SNR. And a shoulder pattern for sell. But under this, we have it as this for buy. Neckline, neckline. So side. So that is place here. We have the HNS. Have the HNS. So we are going to buy into this place, buy into this place. You sell here at the last one, left touch. You sell them. So through that we come to the first. This is so that when we come back, we go to talk about the on fresh level